Welcome to Kudlar Invest Channel.
What about Bitcoin? Why such a positive in recent days? BlackRock has filed documents with the Securities and Exchange Commission for a spot Bitcoin ETF that will contain cryptocurrency as an underlying asset and track its price. Naturally, Bitcoin reacted positively, even too much, in other matters, as usual. In fact, the likelihood of approval is not very high. At least a dozen asset managers have previously applied for spot Bitcoin ETFs and have been rejected by the Securities and Exchange Commission. The regulator claims that such products are vulnerable to fraud and market manipulation. But there is still a small chance. At first glance, BlackRock's proposal is broadly similar to previous proposals, the creation of a trust that will own Bitcoin and can create and redeem shares in exchange for Bitcoin. These Bitcoin ETF offerings are broadly similar to how an ETF works for a physical commodity like gold. But there is at least one notable addition to BlackRock's filing, an expected agreement to jointly watch the Bitcoin spot trading platform with Nasdaq, which, according to regulatory filings, will list the ETF. In other words, this exchange will be able to get confidential information about buyers, sellers and prices. Potential price manipulation of spot Bitcoin is a major reason why the SEC has so far rejected applications for Bitcoin ETFs. If that trading platform were Coinbase Global, this would be a problem because Coinbase is among the exchanges whose prices determine the underlying Bitcoin quote that will be used by the BlackRock ETF. In the case of the Nasdaq, there is no such problem. All previous ETF listings have claimed that the Bitcoin spot market already has oversight capabilities in the form of the CME Group and its Bitcoin futures. The SEC has approved ETFs holding Bitcoin futures. But the SEC argues that even if the prices of the Bitcoin spot and futures markets are very closely related, the agency does not have sufficient evidence that attempts to manipulate trading in the spot market will be detected in the futures market. As a result, the SEC was sued by Grayscale Investments, which manages a $17.5 billion Bitcoin fund and is trying to convert it into an ETF. And so BlackRock showed up with their new idea for a secure Bitcoin ETF. I wonder how it all ends. I think they will not allow anything, and again Bitcoin will be blown away, too volatile a tool. Maybe they just use a higher excuse to drop the no longer safe cue balls against the backdrop of the SEC's active assault on this industry? What do you think? The second largest U.S. bank, Bank of America, which manages over $3 trillion in assets, has invested an additional $59.5 million in MicroStrategy, the holder of 140K BTC, worth more than $3 billion. Now its stake in Mr. has grown to 2.3%. Another huge company, Fidelity, with $4.5 trillion in assets, also increased its stake in MicroStrategy by 28,000% and now owns 1% of Mr. And the sixth largest National Bank of Canada bought back $500,000 worth of MicroStrategy shares this year. And Standard Chartered predicted a long phase of BTC growth in 2024. When the price of BTC dropped by 60%, there was an opportunity to get a very nice entry point for the whales. There is no doubt that they are betting on a long-term increase in the price of an asset.
Thank you for watching. Subscribe.